some people are very, very, I'll just say it, stubborn, and they don't want to share the information. I would never want to sit on wisdom and not be able to share it. And like I said, before I was given this platform, I actually had a lot of knowledge and I would share one-on-one information with people. But this is a better way for me to be able to do everything that I've been given to steward well and manage over well, but still be able to utilize this wisdom and get it out to whoever in specific needs it. So now, for example, with this particular message, I can just tell them, hey, you know, I can send you a video where I actually discuss these matters, and now it's beneficial and it's suitable with the time span in which they need it, which I can deliver it, and, you know, with me still having my obligations. But nonetheless, let's jump back in. And so learning the types of loans. So the 203K loan is going to be the one that's going to fall under the FHA, but you have that ability to have a margin of repair funding for we'll just say renovations or repairs. And then you have your standard FHA, which is going to require the 3.5% to 10% based off of your credit and other factors such as your debt to income ratio. Your debt to income ratio is going to be looked at very extensively when you go to apply for a home. And so what that means is, don't go out and buy a vehicle. Don't go out and just spend lavishly. Don't go run up your credit cards. Don't just pay them off immediately before you go and apply either. Because while it will boost your credit score, what you do not want them to see is your inconsistency and inability to be able to pay for things on time consecutively. And so when you have consecutive payments coming in on time, they say, hey, this is not really a high risk person. This is unfortunately how they do it. They don't care why you had to max out your credit card. I'm just being honest with you. They don't care that your kid had a health ailment or that something unexpected happened, that you had a loss in the family. They don't care about that. Now, where sometimes they will say you can, you know, submit a letter with special, with special circumstances, and you have the ability to explain that, it's not a guarantee. Because at the end of the day, the institution is a lender. You're the borrower. And so you don't want that institution you don't want to think of them as a person or a person with a personal connectivity, because they don't have one. It is strictly business. This is why when you have little old grandma that's lived in her house for 29 of those 30 years of her mortgage, and then her husband dies unexpectedly and they foreclose on her home. If it was not a business transaction, the humility, if you had humility and you practice from a level of humanity, you would allow grandma to stay in.